And inflation is not, the Federal Reserve said after COVID is transitory. It's not transitory. It is not going away. They said the same thing in the 70s in the beginning. Oh, it's just temporary. It's going away. And then it got worse and worse. And then was a pause in the middle around 75, 76. And people were applauding and really happy. It's over. Then it got way worse. And that's how inflation works. The government will do things to sort of tamp it down. It'll work temporarily. So investors should consider we're entering an inflationary world. And for that, the easiest thing to say is buy gold and silver for that. Gold is the ultimate inflation hedge. And people who are anxious to buy Bitcoin is or cryptocurrency is in a classic bubble where it's way overpriced and it could just crash at any point in time.
Hello everyone and welcome to another edition of CEO and Market Expert Interviews. I'm your host Lucian, some of you know me as Triangle Investor from social medias. Very interesting guest today is in my show. He is the author of 6 books, almost 1,000 articles, top expert on inflation investing, former professor, much more. He's very good expert in geopolitics. So the floor is yours, Mr. Daryl Montgomery. Great to have you in my show. Welcome, sir.
Oh, thanks for having me, Lucian.
Yeah, thank you for coming. I would like to start with the 6 books I mentioned that you wrote, and tell me more about the books and the background in general. Tell me more about yourself.
Okay, well, I work in several areas that are sort of interrelated. Um, I've written 4 books about inflation investing, and these were written in 2011, 2012. And I don't know of anyone else in the world who's written that many books. And these are serious research books. There are hundreds and hundreds of footnotes in these books. They're not minor or trivial things, which some people do write. So I consider myself one of the foremost authorities on inflation in the world, especially inflation investing. Now, inflation has been very calm for the last decade till COVID came along, but it was inevitable that it was going to rise and continually rise. And most people do not remember the 70s because they're too young, but we went through this same period, many decades, 50 years ago. So, and we're re-entering that period. So I also have a background in politics, and I used to be a political consultant and a pollster. And I actually wrote a book in 2015 predicting the political rise of Trump. And everyone laughed at that book, said it's never going to happen. He's never going anywhere. He'll never be president. He'll never have any political power. So finally, with this election, I'm triumphant in that prediction. And this was a very detailed analysis of the American electorate. So I now work in geopolitics. I have my own theory called global bifurcation. And what this means is the world is splitting into 2 semi-autonomous blocks, and that's the collective West and the collective East. And the collective West is the United States, Canada, Europe, the UK, Australia, New Zealand, Japan, and South Korea. And basically everything else is the collective East. Most of Asia, all of Africa, most of South America. There's some South American countries that are sort of caught between the 2 worlds, Argentina being one of them right now. So this is my own theory, and there should be a book out about this soon. So I'm also writing a series about the American election, the 2024 election right now. So, and they're all interconnected. American policy affects the world, and America is the leading country in the collective West. So, and in the collective East, it would be China, Russia, and India. It's not one country. People tend to look at things as just one country as opposed to groups of countries that affect things. And that's a mistake in the analysis. And if you read articles, you'll say, oh, China did this and, the U.S. did that. Well, they're not operating alone in either case.
Yeah, variety of topics I can discuss with you because you have the knowledge of multiple fields when it comes to the economy and connected stuff. But let's start with the economy environment. 2024 was another challenging year by all aspects. 2025 is knocking on our door. What can we expect in 2025, and what trends should actually market participants and average people on the street pay attention to?
Well, I would say right now, if the audience knows what an investment bubble is. The U.S. stock market is way, way overvalued, and the amount of capital in the world that has flowed into the United States is disproportionate. So, and this has happened before. The analogous period would be 1986, 87. So, and what happened in 87 was a massive, massive stock market crash in the United States and the rest of the world too. And so we are potentially heading into that sort of period. And at the same time, we have rising inflation. That's different from 86, 87. Inflation was falling at that time. And inflation is not, the Federal Reserve said after COVID is transitory. It's not transitory. It is not going away. They said the same thing in the 70s in the beginning. Oh, it's just temporary. It's going away. And then it got worse and worse. And then was a pause in the middle around 75, 76. And people were applauding and really happy. It's over. Then it got way worse. And that's how inflation works. The government will do things to sort of tamp it down. It'll work temporarily. So investors should consider we're entering an inflationary world. And for that, the easiest thing to say is buy gold and silver for that. Gold is the ultimate inflation hedge. And people who are anxious to buy Bitcoin or cryptocurrency is in a classic bubble where it's way overpriced and it could just crash at any point in time. And the likely times for that is after Trump takes office, and that's January 20th in the United States, and maybe around March. Markets tend to be very weak in March and April and October. So and the 2000 internet bubble burst first in January with the Dow Jones, and then in March with the Nasdaq. So that's another historical pattern. And I look at everything historically, like everything has happened before. They're just like variations on a theme and new names for things.
Yeah, a lot of parallels with the 70s. I agree definitely on that. There was no Bitcoin in the 70s. However, there were a lot of other things. In the 70s, we had the Cold War. Now we have the trading war, and we have the Ukrainian war and some other wars as well. But I would like to hear your opinion on the trading wars. How will this affect the market going forward? Or do you believe we will not see that scenario?
Oh, we could. I mean, it depends on how Trump is very much into tariffs, increasing tariffs. This is deglobalization. And my whole theory on, which has been around for 2, 3 years already on global bifurcation, it's a deglobalization theory that, we went through massive globalization in the 90s and the early 2000s. And then this has been going on for thousands of years. Globalization is not new, actually. So it will have these right, just like the stock market will go up, it will increase tremendously. Then there will be a pullback based on some criteria. Now, tariffs caused deglobalization. And there was a famous tariff act in 1930 in the United States to Hoot-Smalley, which aggravated the depression. It made the depression much, much worse. So this is a danger. Deglobalization will hurt economies throughout the world. Now, it may be a little different this time because the collective East is sort of coalescing around itself. And so it will be a new globalization bloc where the collective West will actually be hurt the most.
Yeah, Daryl, when or maybe better question, if we will see, but when could we see an inflation levels at like pre-COVID, let's say, especially 2015, 2016 levels when it was actually below 1%? Will we ever see that, or
Well, we can if we have a severe depression, sure. Of course, you don't want to have a severe depression. And in my political work, the articles I'm writing now, I trace the United States history back to Abraham Lincoln, and that's the mid 1800s. So that's 170 years ago. And the economic crises up to the 1930s were depressions, recessions, severe economic downturns. And there's been a trade-off since World War II in, well, we'll have more inflation to avoid these downturns. And that's how it's happened. And if you look at a chart, you'll see the number of months the economy in the United States has been in recession has decreased dramatically since the 1800s. And the reason for that is inflation has increased. And you cannot believe the government figures about how much inflation actually exists. It's a lot more than they claim, especially in the United States and many other countries too. And the we are not likely to see a lower rate. And the reason now is that when we have a downturn, is the government floods the economy with money. And I use an example in the article I'm about to publish. The average price of a house in the United States in 1950 was a little over $8,000, and it's now over 400,000. It's 50 times or more than 50 times greater in 70 years. Now, people do not realize in the entire 19th century, that's the 1800s, there was no net inflation in either the United States or the UK. Over an entire century, the inflation rate was approximately zero. Now, there were periods of inflation and periods of deflation. They all balanced each other out, so the value of money did not change and price levels didn't change. Now, I just gave you an example. In fact, cars are the same way. Average price of a car was a little over $1,000. A brand new car, a nice brand new car, was a little over $1,000 in 1950, and you can easily pay 50,000 or more for a nice car right now. So price levels, you can make a case, went up 50 times in 70 years. That's how we managed to avoid recessions and minimize recessions. That cannot go on forever. And we're at the dangerous point where it can just like start going, inflation can start going straight up. Because if you want to stop a recession, and we will have a recession again, it's inevitable, you have to print money. No one ever prints money anymore. We have a computer and push a little button so the money happens
yeah.
magically, right? And so you don't even have to bother printing it. So that'll be the reaction. Let's print more money, and that creates more inflation. And then it's a self-feeding loop. And we're in that self-feeding loop stage right now.
Okay, so the paper is worthless. As we know, Bitcoin is a bubble. What do we have left for preservation of capital? Gold and silver? Anything else?
Well, inflation affects gold, and so gold has been money since for more than 5,000 years, actually, and it will always be money. I mean, there are all these naysayers in the economics profession think, oh, it's a barbarous metal. Keynes said that. Oh, it's not worth anything anymore. But gold will always be protection. Silver, there is severe silver shortages now. Production has not met demand for several years, so eventually something has to give, and the price of silver really has to rise dramatically. And gold being the real money, you can make a case gold is not going up, but the value of the U.S. dollar and the euro and the pound and other currencies are going down. It depends on your perspective. So you want to preserve wealth. Gold is that. Land, certainly. The inflation investment goes into four categories. Precious metals and other metals. And, other metals are industrial metals like copper and tin and aluminum. And if the economy is strong, they work. If the economy is weak, they don't. Gold and silver can work under all circumstances. And then agriculture is another big area, and that's food and fiber commodities, agricultural land, raw land. The best real estate investment in inflation is land, not certainly not commercial real estate now because people are not going to the office. So it's a whole bunch of office buildings that are going to be empty throughout the world. And then the housing is not a good investment. The price keeps going up, but the tax rates keep going up. And when governments become desperate for money, they will tax your house to infinity and your building. Land does not get taxed a lot, however. So the taxes rates, at least in the United States, are very low on land. So
Yeah,
that's your protection. And then oil and natural gas energy is the other major source of inflation investing. Oil is tremendously underpriced right now. In fact, all commodities, agricultural commodities, some of them are starting to rise very fast right now. And that
yeah,
tends to
but
happen early in the inflation cycle. So, by the way.
yeah, but the energy commodities, you probably meant that they are very undervalued as well.
Yes. Yeah, tremendously. So, and something will give with that too. So, any tangible hard asset, and the other things for people who don't like stocks or land, art, antiques, collectibles, their prices have gone to incredible levels already, and they always work in inflation. So any hard asset, and you want to short bonds. You don't buy bonds ever in high inflation. And all of these Wall Street investment houses, oh, you should have 40% of your portfolio in bonds and 60% in stocks. That is disaster. You want 0% of your assets in bonds, unless they're like 1 month treasuries, like super super short term, so you can cash out right away. But you do the opposite of what you would do in low inflation.
Yeah, I really hate to throw numbers with any commodities, but really we are entering the phase where we could see gold price really hit, I don't know, $5,000. All the aspects are here that we see that in the future, right?
Oh yeah, so I've had a prediction for a long time gold would hit $5,000, and it could hit way beyond $5,000. I mean, the price has been suppressed by the New York banks and the London banks. So,
Yeah, would you agree that silver is also even more manipulated by the banks
oh,
and by the big players? I mean, really, when you look at the silver performance, it's actually not a good performer. Silver is not a good performer compared to gold, I would say. It has some trouble breaching these 34, 35 levels. Why is that?
yeah, I consider it pure manipulation. There are shortages in silver, global shortages, and the silver is a key component of all of these alternative energy sources. You need silver to manufacture them, and this is leading to the physical shortage. There's a severe physical shortage. So eventually the price is just going to skyrocket. And silver peaked at $50 US dollars in 1980, and it's still only 30. And it peaked again in 2011 at 50. Now gold was 800 in 1980, and it's now 2,600, approximately 2,600 right now. So it's gone to new highs and new highs and new highs. And silver still has not reached that 1980 high.
Yeah.
So it is very undervalued. It's probably the most undervalued asset in the market by far.
Yeah, I heard a lot of people saying that about silver. So I hope you are all right, and I tend to agree with that. It is really undervalued when you look at the history and when you look at the fundamentals. Agreed. Daryl, do you foresee a market crash in 2025?
It's very likely because the
Very likely.
market is way
The-
overvalued. It reminds me of 80. There's the parallels to 86, 87. In 80, the U.S. dollar was very highly valued in 86, and there were the Plaza Accords, which were real late in 1985, where a large number of Western countries got together to try to tamper down the value of the dollar. by selling it against their currencies. And, this went on and on and on. So because the dollar was so high and interest rates were higher than other parts of the world, money flowed into the U.S. economy and it flowed into the U.S. markets. Right now, if you look at a chart of how much valuation the U.S. markets are worth compared to other countries, you'll see it's like floating up into the sky. And, the gap has gotten bigger and bigger and bigger. So that's very 86, 87 like. And then the crash happened like in a few days, the market lost 40% of its value. And some stocks went down 80 or 90% in those few days. So,
Yeah, but if you could pick one event, in 2008 we had a real estate event that triggered the crash. What do you see as a trigger for 2025 potential crash?
it could be Bitcoin, could be crypto. It certainly could be the Mag 7. I assume your viewers know what the Mag 7 are like NVIDIA, like a small group of tech stocks that are connected with AI in some way. And their valuations are extremely overdone, just like the internet stocks in 1999. All of this
Yeah.
has happened before. All of it has happened before. Nothing
Yeah,
is new.
what about banking sector? Is the banking sector maybe the elephant in the room?
Oh, we'll find out. I mean, in 2008, when the crisis happened. I mean, it was found that Citibank had these special investment vehicles, SIV, that nobody knew about, including analysts, Wall Street analysts. There were all sorts of off the book operations going on that was secret, and it all came out when the banking system got into trouble. So, and that was the center of the it was real estate and the banking sector. And this time, well, there's huge amounts of leverage to buy Bitcoin and the Mag 7 stocks, and just like there was in 1929 and 1987. And some selling event happens, and you don't know what that individual event is that will sort of like tip the market over. It could be any number of things.
Yeah, definitely. But we are seeing red flags already all over the world, not just the United States. I will take the
Yes.
example of Europe. Let's say German economy. It has been basically destroyed. And I
Yeah.
saw your post. I believe it was a post on LinkedIn where you said that the green agenda was one of the reasons why the economy really got a beating, and of course sanctions against Russia. Do you agree on that? Really?
Yeah. No. Well, those are interconnected too. Absolutely. Germany has extremely high energy prices. Its economy relied on cheap and plentiful fossil fuel energy. That's natural gas and oil to a lesser extent from Russia. And Europe is the most commodity poor country on earth. And Russia is the most commodity rich country on earth. So it needs Russia's commodities. And the sanctions started in 2014, which people don't realize, against Russia. And there were already 72 sessions of the EU Parliament that sanctioned Russia in some way before the war began in 2022. 72 times. And I went through and saw all, I had some list of all of the times this happened. And now we've had over 10 sanction packages after that. So it's not Russia that's suffering, it's Europe that's suffering. And so the cheap energy disappeared. And of course, someone blew up the Nord Stream pipeline, and we all know who did it, but we can't say it. And so the price of energy in Germany is very high. And it's not just the need for energy, the natural gas is used as feedstocks for the chemical industry. And that was one of the largest industries in uh, Germany. And some of it's moving to the United States, actually, because we have a lot of natural gas, plentiful supplies of cheap natural gas. So I mean, and that movement will probably continue. They just can't get what they need to produce. The energy is very expensive. In the United States, they can get whatever they produce, and energy is much cheaper. So that's a major industry. They had to stop fertilizer production, which also relies or limited actually right after the sanctions started, because relies on feedstocks from natural gas as inputs into production. So, I mean, they damaged themselves. And Germany is one of the least sunny places on earth. It's not Spain or Africa or, Arizona in the United States. So solar power is not a great choice. And it's only windy based on the coast, and it doesn't have a big coastal area. The inland areas aren't particularly windy either. So it's not a natural place for alternative energy production that we use today.
Yeah, let's touch a bit on Brics. Do you believe that Brics is a nail in the coffin for US dollar?
Yes, I do, but they surprised me many times. What they did in their last meeting was sort of eyebrow raising. They were supposed to add a number of countries. They didn't. They gave them basically observer status, and the choice seemed a bit bizarre. But they don't send me any memos telling me what they're doing, so I don't know their secrets. So, but we have to look at the problem with currency is that we're looking at it as a paper currency, and one country has a dominant currency. It can be multiple countries, which we have not thought of, and that would be Brics. And this is, Russia, China, India, and, Brazil to a lesser extent acting together. And it doesn't have to be a currency. A crypto has opened up the possibility of, electronic currencies, like multiple, like currencies that are basically amalgams of different types of money in quotes. So we've entered a new world technologically, and everyone looks at the old world that it has to be like that, but it doesn't. So and I wrote a series of articles, probably starting in 2022, about the avoiding the use of the dollar. China's part, India's part, Russia's part, the Middle East part. They started selling oil for non-dollar currencies, and there'd been agreement with the United States for 50 years not to do that, and that is effectively de facto. That means in fact fallen apart, and legally it has tentative control supposedly. So, and commodities being sold in non-dollar currencies is a big risk to the U.S. dollar, and that's already started 2 years ago. And there were all these apologists saying, "Oh, the dollar is going to be there forever." No, a reserve currency is meant to last 100 years, and we've had the 100 years. So, and the pound, the British pound, was a reserve currency before. No one thought it would ever disappear, and then basically around the 1920s, after World War One, the U.S. dollar became, paramount. But a lot of people date it till 1944, which is wrong. Also, I mean, realistically, the dollar was a reserve currency from the 1920s. So we've had the 100-year run already.
Yeah, Daryl, how do you see world in, let's say, 10 years geopolitically? And even monetary. How do you see monetary systems in 10 years? They will definitely not be in this form of shape.
Oh well, okay. These are like multi-hour questions. The reason of global bifurcation is going to be separate financial systems for the collective East, and that's already started. And the West, it's the West's fault that this is happening. The When Russian banks were sanctioned from SWIFT in 2022, that was not the first time. It was with Iran in 2012, at least 10 years before. And you cannot weaponize a financial system. It all relies on trust. Once you have violated that trust, you're finished. Now, it may take many, many years before the system totally falls apart. So, both Russia and China saw what happened to Iran in 2012, and China developed a system called SIPS, which replaces the Western system called CHIPS, and that's the actual transfer of money between banks. And Russia developed something called SPFS, which is the equivalent of SWIFT, which is bank messaging. So after the sanctions on Russia, they decided they would combine them and share them with Brics. Now, Brics is eventually going to take over, all of Asia, Africa, and most of South America. Its tentacles will expand to that. So this is already in process. It's already been going on, and then the West has made the problem even worse by freezing Russia central bank assets in Euroclear in Belgium, and Euroclear is totally opposed to this. All of these SWIFT did not want to be weaponized either. It's the United States. It's pressuring all of this. Excuse me.
Sure.
So the Russia and China are combining these systems, and there are alternatives to all the banking systems, money transfer and messaging in the West. So they will have their own self-contained system, and they do not have to use the dollar, and they don't use the dollar in these systems. And this will just evolve and get bigger and bigger and bigger. And the West will have its own system, its legacy system. Excuse me. So this is what's going to happen over the next 10 years. It'll just get more and more. And there will be more internalized economies among Africa, Asia, and Latin America.
Yeah, yeah. Final question. If you can name 5 commodities that you are most bullish on and 5 commodities that you are most bearish on.
Okay. Offhand, I don't know the answer to that.
I
Right
got you here.
now, well, cocoa is right at this very moment. Cocoa is taking off. Coffee is taking off. Cocoa was flat for years and years and years, and suddenly its price is rising very rapidly, and coffee is rising very rapidly. And this happened in the early 1970s also. The commodity, the agricultural commodities, things you grow, had huge rallies in the first half of the decade, the first phase of inflation. And then, oil was rallying too, and, gold was rallying. But then the commodities, sort of the agricultural commodities slowed down later in the decade, and the other commodities picked up. So, I would look at agricultural commodities now specifically. It depends on the growing conditions and where they're grown. And cocoa is only grown within 15 degrees of the equator in low-lying areas, not mountains, in coastal areas, in very humid, hot climates. So it has a very limited growing range. And coffee has to be grown in mountains that are within so many degrees, a wider range from the equator also. So, but not lowlands. It can't be grown in lowlands. So, and sugar actually took off in the mid 70s too. Now that type of rally can be severe but short. So investors have to realize that. So right now I would say the most underpriced commodities are silver and oil. So I would look at those. Gold you can always buy. I mean, it will continue to go up. I don't think it's nearly overpriced yet. At some point, it will have a move down, but we're not anywhere near that level. Sorry, I have a cough. I didn't have it when I started talking.
Sure.
So I would look at, well, there's also complicated. Palladium is actually a very complicated issue because almost all of it comes from Russia and a small amount from South Africa. So palladium's price is very repressed because of anti-Russian sanctions. And you can make a case it's very underpriced. So but as long as those sanctions continue, it will remain underpriced, probably. So I don't know if that totally answers your question.
Okay, let's wrap it up with this. That was Daryl Montgomery. Daryl, thank you for coming to my show. Great chat. I learned a lot, I got to admit. Some of your views are very interesting. And let's make this, this is our first interview, but I believe it's not the last. Let's do this more often.
I'd love to come back too. And just a note to your viewers, we didn't plan our shirts to look alike. It's a complete coincidence.
No
so
worries.
much we think alike.
Yeah, by the way, how can people reach out to you?
They should do it on LinkedIn. You can just look up my name, Daryl Montgomery. I'll be the first one on the list. There's at least 7 pages, if not more. And it says author of 6 books, 800 plus articles, 100 plus public talks. I speak a lot in public, to live groups of people, not just on podcasts. So I like, connect with me on LinkedIn if you all follow me at least. And because I post a lot of articles on LinkedIn and commentary all the time.